Good morning, guys. How we doing? Hope we're all having a good day here thus far, but let's get to work. Market is half decent as far as volatility. It's not tremendous, but it's doable. We can make this work. Quite a few wicks as of late. This is a 2-minute chart that we're looking at here. Of course, up top, we have top left 5-minute chart. Top right is the same 2-minute chart as we will be executing off of here today. Bottom of your screen is the daily, showing just the New York sessions. And you can see that we're in a bit of a range market here, so unless we break into a hard trend, I mean, you could argue we had, a decent little move there off the open this morning. Unless we break into a hard trend like that, for me, it's going to be a lot of buy low, sell high, buy back lower, scalping. See what we can do. Good morning, guys. How we doing? Trading Chris, Javaz, Carlos, good to see you guys. Brandon, Taz, how you guys doing? All the regulars pouring in here. Chris Castle, good to see you. Derek, good morning. Jason Scott, how we doing? Hey, Kevin, Michael, Volatility, what's up, guys? VB, what's going on? All right. Let's draw look number one, huh? Now, here, you could draw this like this. I think what I'm going to do, actually. I mean, right? I think that's probably the average of what most people are seeing, which is what we care about. Now, the one thing to be concerned with here on moves like this is this little wedge oftentimes turns into this, right? So if we get short up here, we're kind of making a bet that we are going to backfill the rest. We've been seeing this a lot lately. Another reason I think it's important to have a lot of screen time under your belt all the time. I get it. It's really attractive to say, I'm just going to trade 15 minutes a day. Well, even if you trade 2 or 3 hours a day, I think you can get screen time going. That is a lot of bars to look at every day. You don't need to trade for 8. But I think it is beneficial to trade for longer if you can psychologically handle it, especially in the early years. But you guys know this potential is here, right? So I'm going to get rid of that, and we're looking at the kind of overarching wedge. Gaines, good morning. Giovanni Joe, what's going on? Good to see you guys. Tony, good morning. Yeah, Vin, I actually... Hang on here. There we go. I actually did. I posted the end-of-day P&L in the Discord. What was it? Finished green, 29.7250. So we cleaned it up a little bit. All right. Now again, right? I'm looking to see, hey, does this become a thing? If it does, I'm a little less inclined to get short up here, though that is the number one thing I'd like to do right now. However, we have to look. Okay, we zoom in a little bit. We look here and to the right. Could bulls be looking at something like this? 100% they could be. 100% they could be. There's always a bull case and a bear case. I don't care how ridiculous everything is looking. There's always both sides. Otherwise, the market ceases to exist. Which is why I think one of the dead giveaways of someone who's a little newer, and I think you should try to avoid speaking like this just because it's going to confuse yourself and maybe others, is one of the dead giveaways is when people come in and they say, this is anywhere, Reddit, Twitter, and they say, oh man, such an obvious long right now. Oh, of course this is a short. Anyone who goes long is really dumb right now. It's always between 30-70 probability at best, more like 40-60 90% of the time. So it's not dumb to do anything at any time. It just might not have edge the way you manage it over a big sample size, right? Steven, good morning. All right. I have to say, I am interested in shorting a nice strong bull bar if we can get it. Now, ideally, I wouldn't want to see it get above like this wick here at 26, especially this wick here at 31. Most importantly, this wick up here at about 39. That would be my end-all be-all cut point on that scalp. Let's see if we can get an entry here. Just looking to trade the little channel. I believe a breakout when it comes, and not before. Guruk started 2 25K evals for Take Profit Trader today. Yeah, the 25K is... I don't think I've ever run a 25K. Maybe I have. I don't remember now. Maybe one. I think I had one 25K at Take Profit Trader before. The 25Ks, though, I will say at Take Profit Trader are a really, really good way to start. They're the easiest to pass. They're the easiest to get payouts on. It's that trade-off, right? They're gonna be the cheapest. It's that trade-off, right? Do you want maybe a slightly lower probability of getting to payout, but maybe it ends up being a bigger payout? Or do you just want to get some fucking money in the bank? If you have yet to take a payout, just try to get some money in the bank. Because I'm telling you guys, with the screen time thing that I'm always talking about is so real. If you ditch I hesitate to use this word because everyone runs with it. If you ditch the gambler's mentality and you start thinking in terms of data and probability, and you don't mind if you take a loss or 3 in a row, and you don't get too high if you win 5 in a row, you just do your job and leave. I really think it's gonna, be a pretty low probability that if you give this 5, 10, 15, 20 years, that you're not gonna be doing well. Most people just quit though, which is why the failure rate in day trading is so incredibly high, right? We don't know exactly what it is. Studies differ. Some say 80%, some say 95. I think it's honestly more like 97 or higher lose. But that's including everybody. That includes the Robinhood traders who come in, buy, one stock that's parabolic, lose, and then leave. And, they were a day trader, right? But they failed. But they weren't really a day trader. They gave it 3 weeks or 3 months or, 18 months and left. I mean, come on, man. If you want to be a brain surgeon, you don't give it 3 months and say, this is too hard, I'm leaving. And then wonder, and then say it's impossible to be a brain surgeon, right? No one would do that. All right, 15 seconds out. Let's see. Not to compare trading to brain surgery. However, they're both very difficult things to do. Now, let's not bullshit each other. They're both very hard. Let's see how this closes. I want to get a nice high close. That's half decent, actually. I'm going to get short there. And I will put my protective stop. 40, there we go. Put our protective stop there. And see if we can take out this little, what's arguing to be a flat bottom. Or at least get down and test that region. And we will drive manually here and see what we can get. If that breakout comes, we're gonna have to cut it and move on. How do we navigate the intraday live trailing drawdown? Well, let's think about this, right? In my opinion, let's look at two extremes. You can either take really big intraday, and first of all, let's ignore market context for the first time ever. And just think about this for argument's sake, right? For the trailing drawdown in prop accounts, let's say one trader who's a big swing trader, they take really big swings, maybe once a day, and one trader is a scalper, they take, 10, 20, 30, 35 scalps a day. Which one might work better for live trailing drawdown? And let's assume they both have edge. Very important. I would argue the scalper, right? Because it's going to smooth out the equity curve, bigger sample size of trades, smaller edge, yes, but bigger sample size of trades, smooth things out. Okay, you're going to take a bunch of losses, you're going to have a bunch of winners, but you have edge, so in the end, it's going to be net positive, right? Now, the swing trader, though, they're going to have some trades, man. If they're shooting for 120 points, that go to 110, pull way back and stop them out 40 points in the red, or 70 points in the red, or 100 points in the red. That is going to kill your trailing drawdown on one big swing. Can work well on a personal account, but with trailing drawdown, because obviously personal accounts, you don't really have a trailing drawdown. At least that's going to fail you out of your personal account. In prop, that is really tough. You did the right thing, you stuck to your plan, but you're getting burned because you went so deep in the money and it pulled way back. Whereas with scalps, you're cutting things reasonably quickly, you're taking profits reasonably quickly, you're still going to have trades that go toward your take profit, never quite hit it, and pull back. But the net effect on your trailing drawdown is going to be way less. All right, let's see how this bar closes here. We have 55 seconds until we get a close on this 2-minute bar. And if it does close into a bull setup, I'll cut this baby and we'll move on and look to see if this breakout succeeds. Otherwise, if we get a big wick back, then we're going to have to give this a moment. "32 seconds out, let's see what we get. "20 seconds. Looking to see if we get a close above that 26 region. Cut that baby, move on. So I cut that above this wick. Now my end all be all stop was way up here. However, I want to see how the bulls react to that close. Oops. That was a pretty strong close out of the bulls, but I gotta be honest, do I believe it's gonna go super far? Not yet. Not yet, I don't. That's the beauty of scalping, though. You can get in, get out, re-enter if you need to. There's nothing wrong with taking two trades with the same idea, by the way. But if there's a hint of uncertainty in the meantime, like there's a really strong close, and you still don't think it's going to go very far, which I don't, but you're like, yeah, I want to see if the bulls take this seriously and pop it, 20 points before pulling back. You can cut it and see if they do that. And then if you need to, re-enter on another signal bar. Nothing wrong with that. Now you can take that and run with it and start making mistakes because you're doing too many things. Well, let's see here. Market seems pretty indecisive about that close. They're like, we're in a range, but that was a hell of a close. We do have the 5-minute chart, by the way, closing in 1:38. Here, I'll show you the 5. Here's the 5-minute chart. That's getting more and more interesting to me, I must say. Let's see how they close this on the 2 here. Yeah, let's give this a second to see if the 5 minute. We have 50 seconds till the 5 minute closes. And I'll tell you what, we'll actually switch here to the 5 minute here on the execution chart. $35 seconds. If this 5 minute does close above this wick here at 31, I'm gonna have to get long. If and only if it's able to close above that wick high. Let's see here. Copy traders ready to rock. Let's see if we get that close. Not there. No trade. Back to the 2 minute. Switch back here. All right, we are 17 seconds out here from the close of this 2 minute. This closes as a doji. That's just absolutely nothing. But if we get a nice last second pop, I mean, I should be ready in case we get a pop up toward 240 and close. Yeah, nothing there. Shrinking, shrinking, shrinking bull bodies. Get the set bull body. Shrinking, shrinking. Yeah, decent close, but shrinking bull bodies. Not interested in that because that's going to give bears a little bit of confidence. And in a market like this, I don't want the bears to have hardly any confidence. Carlos, does it make sense to start as a scalper to get more reps and master that before trying other strategies? So there's a few camps of thought about this. The thing with scalping, okay, let's talk swing trading first. I really hesitate to use this terminology, but just to get my point across, I will. I think swing trading is probably a little easier to make money if you have, assuming you have discipline. The problem with swing trading is a lot of people, first of all, they're taking trades that aren't swing trades. Like in a market like this, I mean, hell, look at the 5 minute chart. Unless you got short on some bar early this morning, which I probably wouldn't have because we're in a range market. But if you did get short on some bar this morning, that right there was like the swing. And now for the rest of the day, you have to be thinking, well, yeah, but it's a range market. Should I really be getting long for, I mean, even a huge move here would be about 60 points, and I don't even know. And you end up getting married to these positions. And the problem is when you get married to a position like this is your one trade for the day, a lot of newer traders have a really hard time cutting it loose. They're like, well, a lot of older traders too. They're like, well, I'll just leave it. I'll move my stop another 25 points. I really think there's another support down there. I'll move it 25 points and then I can be green for today and be done. If that's not you and you have really good discipline, it's probably easier to be more consistent making money swing trading. However, with scalping, mathematically, the numbers work out quicker because the sample size is much better. As a newer trader, you get way more reps, which reps are obviously important. The problem is you can't just be making massive amounts of mistakes on every other trade. And by mistake, I mean like something that is inconsistent with your plan. I think when I say mistake, a lot of people think like doing the wrong thing as far as the market is concerned. But remember, there's two sides to the market always, no matter how parabolic or dumping off it might be. If there wasn't, it would cease to exist. There have to be buyers and sellers at all times. So, I think a mistake I would classify as something that you wouldn't normally do. Like, let's say it's a big bull trend and you short the top and it doesn't work, and you know it's a bull trend, but you add to it anyway, and then you add again. That's a mistake, because you're looking at a trend and you're just hoping it curls. That's a mistake, right? Now, adding to a losing trade in a range market, I wouldn't say is such a mistake, because you have reason to believe it will come back, but you still have to have a point to cut it. You can't just say, well, I don't know what's going to happen if it starts trending right now, but, you know, it's going to come back. Because it might start trending, and then what are you going to do? When that day comes, you're just screwed? You just lose all your money? So I think mathematically it's probably better to start as a scalper to find your edge to get more reps. But in reality, you might make too many mistakes. If that makes sense, I get it. That's not a here's the answer question, but nothing in trading has an answer that's simple. All right, let's see if we get another bear bar closing near the low here. If we do, I think we're probably heading back into that range like we talked about earlier. Again, another reason why in a range market, I cut that trade here for a small loss. I could have added, you know, I could have added technically, but, you know, there's multiple things that you can do on any trade. I just wanted to cut it. That is a problem, though, with adding, by the way. If you're like, oh, that's a really good idea, and it's a range market, I should add to my losers. That's fine. I'm not going to yell at you for doing that. A lot of people would say, you should never do that. That's ridiculous. There's a lot of ways to make the math work. However, just being straight up, it's not, it gets a little bit sloppy on, well, when do you cut it? If you're adding to a loser, you can say, okay, well, I'm going to short a strong bull close because they're confident, and I don't think they should be confident because it's a range market. All right, I'll add on a strong bull close to the short side. But then what if you get an even stronger bull close on the next bar? Do you add again, or do you cut it now? Well, let's say you add again, and then you get another stronger bull close. Now do you cut it, or are you sunk cost fallacy, it's too far gone? That starts to get a little sloppy. So you have to have kind of a pact with yourself that you don't break. All right, still watching these bars here. Let's see if we can get a nice strong bear bar closing near its low, heading back into the channel. If so, I would be interested in getting short. However, right now there is a bull case. As always, right? The bull case right now is going to be, well, something like that, right? Always two cases. PHARAOH, if you got stopped out and the candles that stopped you out were a clear signal in the opposite direction. God, I love the way you guys think. You think about this the right way. You're all turning into price action traders before my eyes. Do you take the trade if that happens? Or do you wait after losing a trade before taking another? I tend to wait when trading prop. Now, the reason I wait is because, let's think about this, right? If you close the trade, a lot of times you guys see I have to like make sure the copy trader is flat because there's that annoying ghost order issue that comes from NinjaTrader through the copy traders that everyone seems to have that issue. Me as well, I'm not an exception. I have to make sure I'm flat, and then to immediately enter the opposite direction, I'm asking for copy trader problems. I tend to wait in that case. However, if you're comfortable with getting flat in the copier quick enough and then still taking the entry fast enough where you don't miss the trade or now it's a poor entry, you could 100% do that. In personal accounts, obviously things are a lot cleaner, 100% you can do that. But now you're really scalping. But there's nothing wrong with really scalping. That's, if you have edge, that's a good thing. You should be cranking up the sample size, assuming you're not giving away your edge, going from 15 trades a day to, 35. Okay, so this reminds me of yesterday a little bit, I gotta say. I mean, right? Right? I mean, there's a bull case there. The bear case right now is, turn this into a flat top, fade back into this bigger, more developed wedge. So right now, I mean, I'm thinking about a few things. By the way, if you were somebody, if you wanted to take this trade long, I wouldn't yell at you. If you bought this rollover into this bar, the close of this bar into this bar, wouldn't yell at you at all for doing that. But you are in the middle of the range. However, it's a half decent setup. That's a reasonable buy. Look to test the high. Of course, we're not sure if it'll work out yet, but I wouldn't yell at you for taking that trade. Anthony, question on the 50K account. With such a tight drawdown window to blow your account, how do you sit through a drawdown? Well, you trade smaller. Anthony, I imagine, tell me if I'm wrong, I imagine you're probably trading minis, am I right? And if I'm wrong and you're trading micros, tell me. But I imagine you're probably trading minis, and the answer is you got to trade a little smaller. Now, if you're already in the drawdown from trading minis, then it's like, that sucks. Then you have two options. Trade aggressively with minis and try to get out of drawdown, maybe blow the account. Or your other option is size down, trade micros, and grind your way out, slowly but surely, assuming you have a statistical edge. Those are your two options. Do what makes better sense for your business model, right? Hey, Corey, good to see you. Appreciate you. Okay, again, this is a 2-minute chart right here. So we have 42 seconds out left, I should say, from the close here, this 2-minute bar. Let's see what we get out of this close. Well, yeah, Anthony, I mean, listen, the answer here is to trade smaller so you make less emotional decisions. Hang on here. Let's see what we get out of this close. Sorry, Bulls. I gotta short you. I gotta short you there. Find a reasonable spot. That's not so reasonable. Find a reasonable spot to place our initial stop order. And see if we can fade that strong bull push. Of course, there's still room in the channel. That's fine. We'll give it that room, but we'll see if we get a fade back into the kind of the lower side here of this little channel. Anthony, yeah, listen, if you wanted to take that long for a longer term trade, totally cool. Wouldn't yell at you. Again, you can do opposite things and both be right. You can also do opposite things and both be wrong. Just happens to be based on management. Anthony, the answer there is to trade smaller, right? So you make less emotional decisions and just do your job. Right, so my job here on this trade is to assess. You know, I decided, well, I think it's more of a range market than anything. So I'll short a nice strong bull close near the higher end of that channel. Give it a little bit of time, see if we want to test the top end of that channel, totally cool with me. But if we clearly break out, stop it out and move on, And if we pull on back to the lower end of that channel, take a little scalp off. That's my job right now, okay? Your job is to do what your plan says and do the right thing. Have integrity to your plan, right? And do the right thing. And if you blow it, you move on. That's part of prop trading, man. All right, ATR, by the way, is about just under 11. Okay, Bull's making a retest there. Now let's see if they try to break this thing out or if the bears are able to fade it. Which, speaking of such, we should clean these lines up a little, huh? Oh no, good morning, how we doing? All right, there's the rollover. Kind of struggling a little bit there. Home Decor, appreciate you. How you doing? Can we use options Greek for the direction of the price in a day? You mean to predict the direction of the price? I would argue that no. For the most part, not really at all. Options Greeks are very helpful to look at. You can look at the ratio between call and put activity. That can also be relatively helpful. You can look at the volume at different strike prices. That can be helpful. But as far as the Greeks, I'd argue no. They are very helpful, though, for positioning yourself in an options position, just not directionally speaking, right? Now, for example, you might see that IV is a lot higher, maybe on the put side, than it is on the call side. Okay, now, as far as predicting direction, that's not necessarily helpful. What that is helpful in understanding is that people are a little calmer on the bullish side, and people are a little more... Hold up here. All right, there we go. My screen just went black, came back. And people are maybe a little bit more worrisome on the bearish side, right? But that's natural, right? That's oftentimes the case, because when the market crashes, it crashes hard. So when people buy puts, they tend to buy them a little further out of the money than when people buy calls. Because when the market grinds higher, it oftentimes does so slow and steady. And when the market crashes, it oftentimes does so aggressively. All right, now let's see here. If we end up cracking this wick, this 9-10-ish central wick, yeah, that'll be my cut point here. I'll be a little bit more convinced at that point of this breakout turning into something a little bit more, but so far, no. Anthony, I'm not just trading one account, brother. We're copy trading. We are copy trading. I'm running Apex accounts. I'm running take profit accounts. But yeah, the 57 micros, that'd be way too many for a single account. For pretty much every size. There we go, getting that pullback a little bit here. See if we can get a little bit of a deeper pullback. By the way, I'm not making an argument here that I think that this little bull trend is gonna completely fail right now. I'm just making the argument that I don't think it's gonna go super far before we at least get some kind of pullback. So we've now gotten that pullback. Now the question is, can we get deep enough into money for it to make mathematical sense for me to pull that baby? Well, ATR, it's holding up reasonably here. On the 2-minute chart, ATR is at 10, so that's the average range of a 2-minute bar. Is 10 points right now based on the last 10 2-minute bars. That's reasonable. I don't like to see on the 2-minute when it gets down to like 5, things start to get kind of tough. 10 is all right, though. We can work with 10. It just means, the trades, can't expect necessarily 40-point trades here. Got to work with what you got. All right, we'll tighten up the stop there. Protective stop. Derek, anyone else find it hard to trade the trend on a range day, like what we have currently, or is it just me? No, it's not just you. This scenario is I think a little bit more tricky, I'll say. I think you should absolutely trade it, because we're gonna have to trade the scenario a lot over the decades, right? I mean, this happens all the time. No trading is easy, but of course there are some scenarios that the edge seems to come a little easier than others. The move in your favor tends to happen a little more quickly than others. Like trend markets, fantastic. You can get a move 25 points in your favor in a matter of, 15 seconds. Markets like this, you kind of have to work for it a little bit more. That's all right, though. It's part of the game. Yeah, higher high. So losing streaks in your following messages, you mentioned that it was working for a while, and now this week you started losing. The market shifts, right? You guys remember like 3 months ago on stream, I was taking 40-point arbitrary take profit, stop loss, 40-point each. More like continuation trades, a lot of stop order entries, more so than lately. It's because the market was different, right? That's what the market called for. And you got to cash in on what the market calls for when it's calling for it. And when it shifts, you got to try to recognize that quickly. That's one of the hard things. This isn't just like setups, guys. There's not just one setup that's going to pay your bills for 40 years. Right? It's price action setups that make sense in your head applied to the current market context, the current market environment, right? Let's see if we can get a bit better of a pullback here. Still got to consider this bull case, right? This guy. We're seeing a little bit of slop. So, just want to see how the bulls deal with this. Am I in a trade now? No, I'm flat. Come on, man, look. Look at the screen. There's a million things going on. Okay, so at best you're on this short. I've been in the money maybe 10 points. Actually, no, a little bit less. Like 9 points-ish. 8.5, 9 points. So we're going to see if we can get a little better pullback there. Otherwise, we got to start thinking about this kind of thing, right? If we're not able to get a better pullback, we got to start thinking about this. Like, hey, does this turn into a sideways trading range? Clean this up as well. There, a little bit better. Yeah, pull that off 1050, 10.5 points about. There's the fall through. Okay, now let's see. Now that that's done, look at this with a fresh set of eyes. And this starts to get a little weird. This is one of those scenarios to me where I'm looking at this and I'm like, shit, I mean, we can make this argument, right? If we zoomed in on a smaller time frame, you could start to make this argument. That's pretty aggressive though. So what's going on here? What's happening? I'm confused, right? So it's probably a trading range, which means I need more information, which means we watch a couple more 2-minute bars, right? I mean, that makes sense. So when I'm sitting here and there's confusion, I need more information. That's what the market's telling me. So we'll watch 1 or 2 2-minute bars and kind of see, hey, what does this turn into? Which case ends up being the one that the market's going to recognize here? Appreciate you, Pine Tree. Good to see you. Gaines, what's up, brother? Hope you're having a good day. Hey, Wrench, having an issue with going for further take profit ranges. I've seen you do further ranges as well sometimes. How do you decipher between closer or further take profit ranges? So, Gaines, do you mean like bigger and smaller take profits in general as far as points, or are you talking about trading tighter versus wider range markets? Okay, so bigger, yeah. For me, if we're trading range markets and I'm scalping, like in the morning, it might seem like, yeah, I don't just love to hear myself talk though. In the morning when I say, okay, we're gonna put our head down today, scalp, buy low, sell high mentality until proven otherwise. What I mean is I'm kind of looking to risk maybe the size of an average bar. Buy low, sell high mentality, scalping for somewhere between half of an average bar to the full size of an average bar profit. Okay, so that's negative reward to risk ratio, which in my brain makes all the sense in the world if we're going to scalp a range market. So, I mean, we're looking, what, I got 10.5 points on that last scalp. That's the average size of a 2-minute bar right now. That's not an accident. So I'm cool, maybe, you know, anywhere from 5 to 12 points as far as take profit. As far as risk, you know, I don't know, anywhere, it depends on the trade, anywhere between maybe 8 and 20 points of risk. Depends on the trade, how we can structure something that makes sense. But it's a range market. Things aren't going to go very far. I mean, that was the whole point of that bet. I shorted the close of this strong bull bar. Took on a little bit of heat, fine. Or wait, which one? Was that trade or was that the first? I think that was that trade. Yeah. Yes, it was. We didn't go very far. We pulled back, right? To expect this to break out and look for an 80-point take profit or even a 35-point take profit, it's just kind of improbable because the range on the day is things aren't going that far. So yeah, you're going to get stopped out a lot if in a market like this. Listen to me, if you're trading this market right now and you're using 12-point stops and you're looking for 35-point take profits and you're getting stopped 18 times in a row and you're wondering what the hell's going on, I thought this was supposed to work. Trading is a scam. That's your problem. You're making too big of an ask out of the market, right? That makes logical sense, right? Things aren't going very far. If the bulls get ahead of themselves, the bears are like, nah, dog. No, when was the last time that you guys were able to take this thing 80 points one direction? Not happening. And they faded back. And the bulls are like, all right. We'll wait for our turn again. And what does this all come back to? One single word. One single word in the chat. What does this all come back to? My favorite word. See, Gaines, you knew it the whole time. Context. No, context. Context is the word. Market context is everything. Those other words are also very important, but market context is everything. Don't be taking big swings in a range market. Don't be trying to bet against things going very far if we're in a trend market where things are going really far, right? That's just contextual. That makes logical sense, right? You guys are smart. Do what makes logical sense in your head. And the more screen time you get, the better. There you go. And by the way, I mean, I know some of you guys are probably sitting here and you're looking at this and you're like, yeah, but this went 70 points, 72 points, 73 points. What do you mean things aren't going very far? Okay, but think about it, right? This is hindsight. Look at it in the moment. Think about this in real time. If you're a price action trader, now if you're trading another strategy, God bless you, have at it. But we're trading price action here. So if you're a price action trader, at least I am, you don't necessarily have to be. Would you get long here? No, it's an inside close. I mean, you'd get long here, maybe. But your risk, you probably would have gotten stopped out because you're probably not going to risk much more than the curl. Okay, so would you get long here? Maybe, probably not, because there's too good of an argument for this. Maybe, but it's inside of this wick. I mean, you could get long there, right? I'm talking for swing trades now, right? But even if you get long here, by the time you get long, you're looking at best like a 20-point move if you top ticked it, right? Which is a ridiculous expectation to make or to have of yourself. So, you know, in hindsight, it's like, yeah, it moved 70 points, but could you have gotten a trade-off on it? Probably not. At least not one that made a lot of sense. In most cases, no, not really. So scalping makes more sense, right? Anthony, do you trade market orders or limit orders? It depends. In more range markets, I'll enter with limit orders. I'm taking profit with limit orders most of the time, unless I'm just my get out now key. That's just more like a market order. But as far as entries, range markets, I'm using limit orders most of the time. Continuation markets, most of the time you'll see me using stop limit order entries. Or if I really need to, because things are moving really fast, I can just mark it in and get away with it because it's such a hard trend market. This is not a trend market, okay? So you're not going to see me doing many market in orders. Just because you don't have to pay that spread. You can usually get a fill on a limit. All right, now, however, we have 15 seconds out. There's not really a hell of an argument for the bottom of a range currently. The bottom of the range really is more like down here. It's off your guys' screen, but... So let's see. I'll get short there and see if we can get a bit more of a push, and I will put my protective stop to begin. There, right at that curl. Now, if this ends up developing into a range, cool, man, we'll cut it and move on. But right now, I'm thinking more, hey, you know, if we scroll back, I mean, where's really the range argument? We don't really have much of one yet. It's yet to develop. So, see here, leave that on. See if that can work for us. All right, inside close there on the 2 minute. 5 minutes developing a little bit of a, well, not a little, a sizable wick. If you're looking at a 5 minute right now. But bar by bar. This is a 2 minute chart. Hey, Redneck, good to have you. Panther, I think you might be onto something, brother. Steve, this isn't necessarily full size. This is my starter size. At least right now it is. I know if I come back tomorrow and I'm trading, 47 or 67, everyone's like, what happened? What happened? It depends on the day. It depends where the accounts sit, man. Right now I'm trading 13 funded Apex accounts and 3 funded Take Profit Pros. Well, Take Profit Pros. With that, we just get a headline. Nothing coming through my wire yet. Trump pushes for 15 to 20% minimum tariff on all EU goods. Little headline there. All right, 50 seconds left here on this 2-minute bar. Let's see how we close here. Hold it there. 14. What we get? 14 3/4, I think I saw. Okay. So I think on that trade, we made. I don't know. I gotta look. Wait, let me think about this. I think we made. We actually didn't get good fills. Now that I think about it, we got pretty bad fills on that trade, to be honest with you, across the board. Obviously, I'm copy trading, so we got a good fill on the leader. Maybe not great on the rest of them. And I might not have gotten the full 14 that I saw. I'm seeing 60 frames a second on my end. You guys are seeing 30 frames a second. But either way, let's move on. All right, we're 2 for 3 on the day. Christian, I posted in the Discord. Below the goal, but I was green, about 2,900 bucks. Okay, so now that this volatility is here, this is actually very nice to see. That last bar had almost a 30-point range, which is... I mean, that's a good thing, guys. We want volatility, but we gotta let it maybe calm down for a bar or two, because that's a really wicky bottom. Christian says, you trade better on or off stream? Doesn't matter. Doesn't matter. I just do my job either way. There have been times when the mornings when I'm streaming have been better than the afternoons. There's been times where the mornings have been a little tougher and then the afternoons have been a little bit easier to clean things up. Mostly market conditions. Me being live has very little to do with it. Okay, now let's see here. We have a few options, of course. Obviously, we could always break lower and just turn into a big bear trend. I think that's not extraordinarily probable, though, being that daily chart, bottom of your screen, very small bodies. Things are not going very far. So if it does happen, though, we'll trade it. Otherwise, of course, maybe this widens out to a descending bear channel. Maybe we end up in a sideways trading range. With every bar comes more information. I'm always looking for a trade. Nothing yet, though. A lot of inside closes. A lot of wicks. So, again, 3 trades so far today. We're 2 for 3. MJ, no, Take Profit Trader does not have straight to funded, at least not currently. But I don't think it really matters that much because I really like Take Profit. Once you pass its daily payouts, that's their big thing, and the money's in your account extremely fast, which is obviously very nice for those of you guys who are trying to bootstrap going full time. Take Profit's a hell of an option. Obviously, Apex is the best by far for scaling big. But when you're first starting, man, if you're looking to quit a job or something, you need money coming in quickly, right? And Take Profit's probably the best option for that. So as far as bootstrapping full time, man, I'd probably start at Take Profit, and then when it's time to take it big, hit Apex and hit it hard. Let's see here. Again, a couple options. Do we turn into this thing? Sloppy as all hell, but do we turn into that? Or does this turn more into this? That'll determine how we trade it. All right. Do news wicks put you off an entry? Yeah. Yeah. When news hits, if it's extremely volatile, it's 50-50. And there's no way around that. So when news hits, I'm either, let's say I'm in a trade where things are a little bit wider, take profit, stop. I'm either letting it work itself out and get back to normal so I can see the idea through, or I'm cutting it or taking profit, or if I'm looking to enter and all of a sudden we get news and there's an outsized bar, I like to refer to it more of as an outsized bar, which is usually news related, yes. Typically I'm holding off. But again, discretionary call, but it's usually pretty obvious when something's news related. All right, we got 54 seconds out until the rollover here of this 2-minute bar. Let's see how we get a close. This is one of those scenarios, man, where it's like if we get a close beneath this wick low here, this guy. This is a pretty damn aggressive descending bear channel. It is a bear channel, but it's pretty aggressive, and these can give way a little easier than one that's less aggressive, at least in my experience. So if we got a close near the low of this bar in the next 20 seconds at like 74, if I had to do anything, I would buy it. I would buy it. But I'd prefer to do nothing in that case, just because this is so aggressive. You can see the bottom fall out, and all of a sudden the bears get a rush for 30 seconds of confidence, and they take it, 20 points lower and then bounce it back up, back into the range. So, but there you go. Bulls right back up into the range. Kind of a tight channel here. We'll see if this turns into a sideways trading range. I imagine it probably will. But I don't care what happens. Just trade what happens. The price action, right? Vinny, all right, I've got some serious data, and I'm convinced that negative reward to risk is the best thing for me. Thank you for showcasing those techniques. Yeah, I mean, mathematically it makes sense. Everyone goes, negative reward to risk. You can't make money that way. I trade 3-to-1. Okay, let's see if you're still trading in 8 years, 10 years. Because you'll probably have given up when you lose 16 in a row because you're trading a low probability, high reward to risk strategy. You can make money doing that. If you understand that you're going to have losing streaks that are long, because the probability of success when you're making a 3 ask, willing to risk 1, is lower. Futures are efficiently priced. That's how the math works. But yeah, especially when the market's ranging, negative reward to risk makes a lot of mathematical sense. You don't have to trade negative reward to risk in a range market, but it makes sense to lean into that, at least for me. In continuation markets, does it make sense to lean into at least 1-to-1, maybe 2-to-1, maybe 3-to-1, maybe 5-to-1? Yeah, it can make more mathematical sense in trending markets to do that. Yeah, and it all comes back to that one magic word, context, market context. If you ignore it, you're going to get burned. You lean into trying to understand the market context and then applying the strategies with little nuanced differences here and there, I think you'll do well. Isn't that the whole point? Okay, here. So we have a minute and 13 seconds out till the rollover here of this 2-minute bar. It's very interesting. Couple of strong back-to-back bull bodies. Let's see if it closes that way. But we got to be aware. I think everyone's probably kind of looking at that. Yeah, see that? It's not to the tick, by the way. This is just a range. So, again, I don't put my heart and soul into that line. I just see it and say, okay, does the market also see it? And then we trade the price action. All comes back to price action. "25 seconds out. Ooh, you see that? You see that? Bulls showing a little bit of insecurity there. They're like, see these wicks? I don't know, man. See this? Yeah, I'll take profit. This bar becomes really, really crucial for me to get out of this fog of little wick back insecurity out of the bulls and see this thing for a little more clearly for what it is. All right, 53 seconds out here. Another inside close. Shrinking bull body. We're getting insecurity here. All right. A lot of weight now on this new bar. Let's see what we get. Minute 45 out. Yeah, Vin, I gotta hit it here soon, but I gotta see how this bar plays out, man. If we get a big, strong bull bar closing near the high, I'm gonna have to get long. Or if we get a big, strong bear bar closing near the low, I gotta get short for a retest into the lower third of this little channel here that would then be forming if that occurred. So we got 65 seconds out to see how this bar closes and see if we get something interesting here. Ooh, 35 seconds. Come on, bulls. Now we gotta pay attention, right? Ugh. Here's the 20 EMA on the 5. That's a big self-fulfilling prophecy. I don't care about it, but other people care about it, so I have to care about it. This gets watched. The more it gets tested throughout the day, the less interesting it becomes. But it's there. Let's see here, 5 seconds. Ooh, sizable wick back on the rollover. See that? That wick is damn near half that bar. Yeah, and that self-fulfilling prophecy of the 20 EMA on the 5-minute chart is at 218. But maybe 218.50. Shomisha, good morning. How we doing? Damn near good afternoon by this point. All right, don't go anywhere. Back in 2 minutes, just getting coffee. We are back. All right, a lot of inside closes here. This was a reasonable close, but looks like we may be entering a little bit of sideways action, or may just expand out and fade back to the bottom of this existing range, kind of expand that range out, which would actually be very nice for us. That'd be very good. Gives us a lot more room to trade. So 40 seconds left here on this 2-minute bar. Let's see what we get out of the close. Twenty seconds. I will get short. Risk. Let's see here. Well, protective order up there. It's not necessarily full risk. Obviously, I'm driving manually, but there's no reason I can't let it go that high. And there we go. All right, let's see if that works for us. Let's do your job. Now, obviously, here we have a couple of options. I'm kind of more looking at, well, you could even argue that this would be a flat bottom, obviously a little lower than I have it drawn, but something like this, kind of sloppy on the downside here. So let's see if we can get a short back down into this region here. Otherwise, if we see this kind of thing start to happen, right, which is entirely possible, by the way. Then my idea will be out the window, but that's all right. Yeah, CJ, hey, I got your application for Market Mastery, brother. I'll talk to you when I'm off stream. Just reply to that intro text, though, if you would. There we go. All right, Bears, looking for just a little more than that. A little more than what we got there. Pull it at 10 points. Move on. All right, there's $1,000. On to the next. By the way, some of the accounts that I'm using right now are Take Profit Pros, and they are running a ridiculous, stupid deal. This is still the 4th of July deal, by the way. They're running 40% off, no activation fee, which the activation fee alone is $130. That gets wiped when you use code BIG, B-I-G. Then you also get 40% off the top of the test fee, which is ridiculous. So, all right, guys, on to the next trade here. That was a decent little scalp. Let's see how this closes. We are 21 seconds out from the close here on this 2-minute bar. Christian, 500 on the day. Good work. Thanks, Nico. Feel like I'm getting somewhere now, not just fumbling through. Yeah, I mean, listen, price action's real. It's the realest thing we have. That's where I want to go. I want to go straight to the source. Those of you guys asking about average take profits, it depends on the trade. It depends on the setup. It depends on how we structure it. But generally speaking, in trend markets, I'm looking for more. In big, wide, volatile range markets, I'm looking for more. In this market lately, I'm taking smaller point profits, right? Just because, you know, I can't make an ask for 45 points out of a market that's going maybe 20, 10, 20 on any given move. Right, so there we go, guys. We have a close right near the low. In more of a bear trend, less of a range, I would short that rollover. But we're in a range market, so I can't, because I would want to take out these stops. You can see we did take out these stops. Bulls instantly came back in to buy. In a trend market, that happens less often, right? A lot more times you get actual follow through, whereas here you get a lot of hesitation is the word I'm looking for. I don't trade the way you do, but for some reason watching you trade helps my psychology. It's insane. Thanks. I find myself way calmer during my trades just from watching the stream. Good to hear it. Good to hear it. We don't want to live our lives all stressed out. We want to make a lot of money, be happy, not be stressed. Isn't that the goal? Not have to go anywhere, stay home. But I mean, if you show up to the screen and you're stressed out of your mind every day, like it's almost not worth it. Follow your plan. Helps keep you calm. The outcome of any one individual trade, it just fun. I'm not just saying this to make you feel better. Like it fundamentally, it just doesn't matter. If you have edge, the numbers will work out at the end of the quarter, at the end of the month. If you have edge, which is obviously important. All right, little inside close here. You know, if you were somebody that's like, yeah, I want to scalp a lot. I want to take a ton of trades today. If you bought that rollover, I wouldn't be mad at you. Just to provide context here. Vin, 500 bucks today. Good work. By the way, this is the phone that I do all the one-on-one stuff off of. Text, voice. I'm big on voice messages, so that's what they get from me most of the time is voice messages. If you guys do want to work with me, I'll drop the link in the chat. Can you still link take profit up with Ninja Trader? Yeah. Yep. So the way I have it set up is I have my Apex accounts linked up with Ninja through Rhythmic, and then I use Tradeovate for my take profit accounts. Works just fine. I don't know if this is still the case, but recently I've been hearing from a lot of people, or I was hearing from a lot of people, that obviously if you try to go two Rhythmic connections through Ninja, it doesn't work. So I go Rhythmic with Apex, Tradeovate with take profit. Works just fine. No problems at all. So watching this, though, I gotta be honest, I might, at this point, you can probably extend it. Right? I mean, just draw what's reasonable, guys. Think about it this way. If you approached 100,000 people on the street, and they all knew what a candlestick chart was, but they didn't maybe know a ton about trading, and you're like, hey, what's the most obvious resistance point that you think algorithms and other people would see? They'd probably draw that. Now, I don't like to think of these as support and resistance. I like to think about it as hesitation points in a range market, because it's never going to be to the exact tick or the exact point, but it's a range. I mean, are the bulls going to hesitate around here? Probably, right? Unless we get some crazy news that pushes us through. So, something to think about. By the way, listen, hey, love having you guys here. Bunch of new people here today. I appreciate you joining the stream. We have a regular crew who's in the chat every fucking day they're here. Hope to see you become one of them. Appreciate you joining us. Bit of an early pullback here. Let's see if the bears see this through. Oh, this is interesting here. All right, now you guys know. You guys probably already know what I'm thinking. This is the benefit of doing all this live. Because I think a lot of you guys could probably already predict what I'm about to say, right? Right now I have to be a little bit hesitant. However, if the market was less range bound, less just brutal ranges time and time again, you know what I'm thinking here, right? I'd be looking at this and saying, all right, well, this is a newer level, so there's not going to be a million stops. Remember, this is a 2-minute chart. It's not a 5-minute chart. This is a 2-minute chart. So this is kind of a recent level. Not a ton of time to accumulate stop losses, but there's going to be a few. However, down here, those stops kind of already gotten taken out, but, you know, there might be a few a little bit lower, might be a few a little bit lower. If we were in more of a bear trend market, more of a range market, I would look to maybe see if we can hunt these stops for an additional extra 5 points of kind of free rocket fuel. However, we had this conversation on this bar, right? In a range market, if I had to do anything, I'd buy the rollover, the close of this bar, open of this bar. Would have worked just fine. Selling this, looking for a big continuation move in a brutal range market that like we've been seeing lately, which is why market context is so important. I mean, for me is not great, right? Which is why I make a different decision than I would normally because the market is so range bound. You buy that instead of selling this, whereas in most markets, I'd be selling that. Right now, volatility's quite low. The range market has been brutal. So bears get a little cocky. Ooh, nice close. Near the bottom of the bar, near the low end of this range, near the low, at that time, low of day, right? Buy it. Nah, bears, I don't think you should be so cocky. Buy the rollover. So, all that to say, I gotta be careful here looking for big continuation through this low. But if we got a reasonable bear close high enough that gave me enough room, I would still take the short. Just thinking out loud. All right, we got a minute 30 left here on this 2-minute bar. I gotta tell you, a strong bull close above a lot of these issues here toward the top end of this quote-unquote range. And I would have to get short. Of course, it depends how it looks in that very moment, but that's the general idea here. "60 seconds out." Let's see what we get. "35 seconds. All right. This trade takes some guts. Let's see if we get it. I don't buy it, bulls. I just don't buy it yet. This is just a very basic bet against the breakout, and it's always a range, so a little bit of heat taken on this trade is not really a big deal. Now, if the breakout succeeds, I do want to get stopped and move on. I mean, you see this, right? In a again, less of a range market. Obviously, the bulls, first couple minutes after this close, having a little bit of trouble here. In more of a range market, I think there'd be a lot less issues. You know, so I would have probably bought that rollover, you know, this wasn't there. In more of a trend market, okay, instead I said, I'm going to bet against that breakout. I don't buy that out of the bulls. These breakouts have not been going very far today, obviously within reason. It's a range, not an exact, you know, point. This is our fifth trade of the day? Or fourth? I think right now we're 3 for 4 and this is our 5th trade of the day. I think that's right. Yeah, I don't buy it, bulls. Take it back into the range. ATR is at about, it's just under 14. 13.8 is the average range of a 2-minute bar currently. So it can't be looking for massive, massive moves here. That doesn't make a lot of mathematical sense, so. But need more than a couple points. Come on now. Come on, Bears. Take it back into the middle third. Come on now. We'll try to take this higher. Let's see if they can. Let's see here. At best so far on this trade, we've been like 6 points. Yeah, it's not. ATR is about maybe 12.5, 13 right now. It's not the worst we've seen this time this week. This time of day, I should say, for the most of this week. Actually have decent ATR. See that bull's trying to take it out of this little flat region here. And being that it's a range market, that's not an instant cut for me. Well, let's see how this bar closes here. Yeah, we'll cut that thing and move on. All right, so we're still green on the day, but we'll cut it and move on here. Okay, we are a minute 37 out from the close here of this 2-minute bar. Now we got to look at this fresh set of eyes. You know, you have a few arguments here, right? Bulls are probably looking at something like that. You know, bears are probably looking at something like this. You even argue that, right? Hey, ascending bull channel, that's a good argument, right? Sideways trading range, that's also a good argument, right? So, but right thing for me to do there is cut it and move on. Don't get married to a trade, man. It's just a trade. It exists for one reason and one reason only, to pay you. And if things change and that probability inverts, its existence has been tarnished. Nico, bench PR. All-time PR on bench, 135, baby. Nope, that's pounds. This is a hell of an argument here. I gotta tell you though, this really is about 12 points wide, 13 points wide. That's a hell of a tight trading range. Well, I mean, I gotta say here, ATR is holding up. It's reasonable. ATR is at damn near 14. The issue is, you know, we're getting a lot of wicks. And wicks like this are tough to get a read on. At least for me, there's not a lot of edge when we're getting this. But we're never more than 2 minutes out from a trade, so we'll keep an eye out. What is ATR? ATR is the average true range. So it's the average range in points of a 2-minute bar based on the last 10 2-minute bars. Yellow down here is the range of each individual bar, and the blue line is the average of the last 10. Just a gauge of volatility. Helps us determine what kind of ass to make out of the market. Listen, hey, again, a lot of new people here today. If you have not done so, I'm live every single day. Subscribe to the channel. Hope to see you become a regular in the chat. The more the better, and we have a hell of a crew that's here every day, making a ton of progress. I really love to see it. You guys in the Discord, too. It's obviously just free. Just a spot to hang out and talk. You guys seem to be killing it lately as well. But I'll tell you what, it's about time for me to hit lunch and let this volatility come back in the afternoon, and we'll keep on rocking and rolling. At least I'll finish out the week here in the afternoon and see what we can pull together. Listen, hey, if you guys want to work with me one-on-one, I'll drop the link in the chat. Right to the phone, man. Text, voice message. I will do everything in my power to get you on track. But I'll tell you guys what, I hope you have a good weekend. Listen, guys, I feel like I give this speech every Friday, but this is really true. I know a lot of you guys sit on your hands all weekend. You're like a crackhead. I need to trade. The market's closed. There's nothing you can do about it. And what are you going to do? Sit here and trade a 3 ATR on Sunday evening? Probably not. Your job this weekend is to rest up and be a coherent trader come Monday morning. Which means rest up, take a couple of days where you're maybe thinking about trading, maybe looking at data for an hour or two Saturday or Sunday, but your job is to make sure you're fresh for when the market's back on Monday. Okay, so do your job. If you're sitting on the couch all weekend anxious as hell because I need to be trading, that's not your job, because come Monday, you're not going to be fresh. All right? Do your job this weekend. All right, but if you're going to trade the afternoon, be patient. Let it come to you. And when it does, fucking hit it hard. All right, guys. Hey, use code BIG, take profit trader in Apex. Best deal always. Couple of great deals they're running right now. And I'll tell you what, subscribe. I'll see you Monday, okay? All right, guys. Have a great weekend. See you soon.